Let's talk more about the state of private markets. We're joined by Erik Hirsch, co-CEO of Hamilton Lane, which is a global investment firm focused on private markets, including private equity, credit, real estate, and infrastructure, with $986 billion in assets under management and supervision. Erik, it's good to see you. It's an interesting moment, isn't it, as we have been talking about this private fundraising that has happened for the likes of OpenAI, but of course not just OpenAI. What do you make of it? And through your career, how has this kind of changed? What has been the real reason that so many companies are getting so large on the private side?
Julie, always good to be with you.
You too.
I think what you're seeing is this is a sort of typical maturation and an evolution, which is if we go back a couple of decades, people wanted to be public. That was the hallmark. That was the stamp of success. That told your customers and your competitors that you had made it. That's no longer true today. So today, the number of public companies has generally been trending down and to the right for the last several decades, and there's a few reasons for that. It's expensive, time-consuming, and all of that to be a public company. I know, we are one. But it's also the fact that the private markets have continued to develop, mature, and grow to a point where there's adequate capital to allow you to stay private for as long as you want to.
And do you see any kind of change to that equation?
I don't. I think, frankly, this is just giving choice to the market. If you want to be public, and by the way, again, we made that strategic decision several years ago because we saw some real strategic advantages for Hamilton Lane to be public. But if you don't see those advantages, or you frankly see more advantage in being private and having private capital, private partners helping you grow, then you've got the optionality to do that. I think this is a good thing. It's not a great thing for the public markets because, again, there's just less choice going over there. But I think it's a good thing for companies to be able to chart their own path depending on which one makes the most sense for them.
Well, and it's also maybe one of the things that is less good is that most investors, the vast majority of investors, don't have access to the private markets, right? They can't invest in OpenAI. That maybe seems to be changing a little bit. Do you think it is going to change, and how quickly is that going to happen?
So I agree with you that that has been a real downside for individual investors. If you're not part of a pension plan, where frankly, a lot of those returns are coming from the private markets, you've basically been left out and left behind. That is changing. So with the advent of a series of products referred to commonly as evergreen funds, private markets are now being much more accessible to the mass affluent. That's still not everybody, but it's a big step forward for people with a couple $1 million net worth, and there's a lot of those people, as we know, in the United States, but that is happening now. And if you look at the exposure for that customer base, it's basically 0%. But the change is here, the change is coming, and I think it's going to occur very rapidly. The next question then tends to be, do you think we're going to get that private market access moved into the 401k market? And I think that's a different question.
What's your answer to that question, Erik?
I think we will eventually, but I think we're going to see more. We need more than simply an executive order or the administration saying, hey, let's make this happen. I think you're going to see real regulatory reform required in order for that to happen in a way that makes sense for the consumer of that product and the provider of that product.
I want to switch gears and just ask you as well about something that's been going on in the news, and that's the government shutdown. Because I know it's something you're watching, but I'm curious specifically. We've had the IPO window finally open back up, a number of IPOs. That allows exits for firms like yours and stuff you've invested in. With the SEC, presumably on furlough like everybody else, does that run the risk of sort of slowing down that momentum?
I think this is a question of duration. My own view is that we're going to see this likely get resolved this week. But if I'm wrong and this stretches for weeks or longer, then I think you're going to see ripple effect. I think right now the market is telling you that they also believe this is going to get wrapped up and resolved in relatively near term. But again, if that proves to be incorrect as we sort of see what happens or doesn't happen this week, then I think you are going to see ripple effects, not just simply from the SEC, but we're going to start to see some ripple effects across other broader parts of the economy.
So I guess then, all things being equal, let's say the shutdown is short. Do you think that the IPO window is, that things are now sort of open for business again? And what does that mean for exits in your business?
Well, I think it does mean that you're open for business. If you look at how recent IPOs have traded, generally have been trading very strong. I think part of that is this sort of pent-up demand of the market is looking for more diversity and more product. If you're a primary public market investor, you are dealing with an equity concentration, market cap concentration, the likes of which we haven't seen in recent history. And so you've got a small number of stocks driving the performance of the indices. And I think investors are smartly looking to try to get more diversity in their portfolios. And I think that's been a big reason why you've seen strong performance. And once you see strong performance of recent IPOs, what does that result in? It tends to result in more IPOs.
Right.
That's a good thing for the markets. It's a good thing for the private markets who are using that as an exit environment. So I think all of that is a positive trend.
Erik, great stuff. Thank you so much for your perspective. Appreciate it.
Great to see you, Julie.